G'day, money miners. The quarterly season's heating up, and I'm yet to see an exploration company report they've switched suppliers to Axis mining technology if they weren't already. So I look forward to seeing at least one talking about gyros and core ories before the end of the quarterlies, boys.
Low-hanging fruit, isn't it?
Yeah. Jesus Christ, what more do we need to do here? Axis Mining Tech, the trusted. You just trust them. That's all you need to know. Boys. Director's special, mate, she's flying, and the banner ads are full up as well for the next month or so. So get in quick if you want to get in line. Is that how I was supposed to say it?
Yeah, just pull a
I don't want
ticket.
to sound like too much like a dickhead, but like, fuck, you want to get in, you better get in now. She's going off.
Yeah, and add it, mate. I think that we're learning all this stuff about email marketing, but just to make sure it guarantees it in your inbox, and it helps us as well. If you just add, when you get the director special in your inbox, search it and add it as a contact. That tells whoever your email server is that it's a safe thing, and it maximises our deliverability to everyone.
There you go. Just reply, and if you reply as well, just reply and say, JD, I like your haircut, or something like that. Then they just, it all just flows from there. JD, welcome back in the flesh, mate.
Thank you very much, mate. Happy to be here.
It's good to see you, mate. What do we got today, boys?
There's only one place to start, and that's uranium.
Oh, of course, yeah.
Going out to Namibia, aren't we?
God's country, we're a bit out of the bloody... Trav's bet that he didn't take might have actually come to fruition.
You sound surprised, mate.
Oh, no, it's separate to the podcast. It was on Twitter, but
I'm Nostradamus.
Everything you do on Twitter is associated with the podcast. But how long did it have to stay below $3?
No, it was 6 months from then. So it's basically in 2.5 months' time would have been the measurement date.
So there was
below,
a measurement
below
date.
3. Yeah, 6 months' time. So it was basically, that was the bet. Don't know if it'll happen, but it's a huge story, mate. S32 is a fucking $15 billion company, and it's down 13% today, intraday, which is just
Bloody dosh.
That's a lot of money, vaporized, gone, poof.
Yeah, it's like a bloody gold developer. Fucking gold producer wiped out off the market cap. Bloody unbelievable.
Speaking of gold producers.
Yes.
Regis.
Yeah.
DFS for McPhillamys came out. We'll have a chat about that one too. And Trev, you got a couple, three strugglers.
Maybe strugglers. Maybe survivors. Well, yeah, but just 3 interesting stories I'm going to tell at the end.
Let's do it. Matty.
Righto, good old Paladin. You'd say what? One of the 2 producers on the ASX. Is that right?
Uranium
Currently?
producers, yeah.
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 Yeah. It's only them and Boss producing pounds effectively.
BHB.
Oh, BHP, of course. Yes. But their eyes on ETF flows.
It.
So they've produced a bit over £500,000 up until 30th of June. So they've got the good old Langer Heinrich mine in Namibia from the great fame of Johnny Borshoff back in the day. That's what this was what. Yeah, they're living off the coattails of the great Johnny B. So it's the only man I've seen with people's Twitter handles like with his photo, and like one guy, JB's long lost son. So you know you've made it if you got Twitter profiles about you. So first shipment, 320,000. So as well, Paladin owns 75% of this. It's 25% CNNC, the Chinese nuclear company. So it's not 100% of this. So these are all 100% basis. First shipment, 320,000 pounds of yellow cake is on the boat as of 12th of July. So not included in these numbers for sale. So they received a cash receipt of US bit below $25 as a partial advance payment for the offtake in relation to this shipment. So this, assuming that payment was for all of that shipment, that implies a uranium contract price of around $77.68 a pound. So that's sort of spot sitting around at 84. So that's sort of where that term pricing is, if you back calculate. I assume that's right. So they're guiding for £4.25 million for FY25, going to ramp up to £6 million eventually.
And that's the 100% boss. Sorry,
That's 100% basis, yeah. So they're guiding cost of production, these are the midpoints. So cost of production, $29.50 a pound for next year.
But that's they're only producing from the stockpiles.
Yeah.
Right.
Yeah.
So that's basically cost of processing, not including cost of mining, because they're not doing that. Is that right?
But what's going to happen is, and they've also said capex of $26. So if you add that cost of production, that capex together, that comes out at around $35.60 a pound for next year if they hit the midpoints. But then once they ramp up to looking at from their initial study and everything, once they ramp up to 6 million pounds, obviously your processing costs comes down. You will add a mining cost in, which looks around about, I don't know, maybe $10 a pound. There's still stockpile reclamation and stuff at the moment, so there is a cost attributed to it. So it'll look like it'll go up. No, it won't go up like shitloads because the processing cost will come down a bit per pound because they are lifting up to 6 million. So they will add a mining cost on top of that when they actually start mining, which is scheduled for pretty much around the start of FY26, and they're looking to reach that 6 million pound mark at end of calendar year 26, they've indicated. So pretty much once that mining cost gets added on, processing come down a bit. If you're looking at, they're selling it at $78 a pound, pretty much 50% margin on what it's costing for them to get them out. So when you look at 50% margin, this is where the great uranium debate is at the moment, the super bulls versus the rest.
Versus the bulls.
The super bulls versus, and it was funny too, like Warren Irwin was probably the first one we've talked to that's actually said, look, I'm sort of on the other end of the narrative at the moment. But remember, the super bulls all own uranium stocks and probably physical. The people that aren't the super bulls have probably made their money already and are out of it. So just keep that in mind when we go through all these reasonings. So if you talk about what's incentive pricing for uranium, like if they're, say, like Namibia is not the highest grade, highest quality uranium mines in the world. Like they're not an Athabasca Basin thing. It's a much simpler open pit and it's existing infrastructure and everything. But they're not a tier one. It's not a tier one thing, and it's
a restart project for a reason.
Yeah, exactly. They're looking like they're going to make 50% margin. So same as a gold producer producing at not all in, but close to all in of $1,800 an ounce at these prices. So, like you'd say, the price of uranium right now is what it needs to be to incentivize new mines to come on. I think so the idea that uranium is going to go to bloody 130 or whatever, lot more things at play. So we'll go through. I'll go through what I've interpreted it as both sides of the argument. So even though, okay, the uranium term price right now that they're selling for, that's at incentive price, but does that mean that all these uranium mines are going to come on like that? Function of, as great Mike Oehlman says, function of getting permitted and developed. Is that going to be quick enough to bloody negate this bloody so-called supply shortage? So will they come online faster than these new reactor builds? Yeah. So remember, a 1 gigawatt reactor can take 6 to 10 plus years to build, depending on who builds it. China pump them out 6 years or less. So there's currently 62 reactors under construction around the world as of now. 28 of them are in China. So China's bloody flying. But on the other side, will there be some of the later life reactors that are currently in operation start shutting down while those new ones are getting built? So it doesn't mean that there's going to be a bit more requirement for supply, but a bit of drop in demand as well with those shutting down. So there's a big bloody balancing act there.
And it makes perfect sense that the first cab off the rank is all the restart projects. Yeah. So Honeymoon, Langer Heinrich, Alta Mesa, all these projects that have been in operation in the past, they just come on naturally much quicker, don't they?
Yeah. And God, I'd hate to see a fucking global uranium supply chain model, because there is so many moving parts between all these reactor builds, the conversion, the enrichment, and the builds of all those facilities, plus the supply. Jesus Christ, that'd be like old mate, that picture that keeps coming up with the beautiful mine, the bloody off. What was that off?
It's just the one with how every company in Australia
the meme I keep getting my head put on. for the thumbnail.
Oh, that's Pepe Silvia. It's a meme from It's Always Sunny in Philadelphia.
That's the one.
Yeah.
It's one of those sort of setups. Then the political side, big Trump looking to be back in power soon. It'd be interesting to see what effect that'll have on uranium, because you can predict that he'll want to make America great again. So he could really enforce hard the detachment from Russia and make it difficult for utilities to get these waivers. But we did see last week that US utility Centris, they were granted a waiver for low enriched uranium from Russia for the remainder of this year and 2025.
I think one of the most compelling arguments on the US political side of things is that he'd be supportive of, you know, a lot of energy, and that just getting energy from every source possible, whether that be oil and gas, nuclear, just so that US manufacturing, one of the things that is core to his heart, you know, can be done at a cheaper rate. You lower the cost of energy across a country, it benefits next to everything.
Yeah, and I think for how much nuclear that US uses, its build has obviously been its growth of the nuclear industry has been very small in recent times. A lot of it's like existing from a lot of years ago. So he could ramp up renewables there as well, and like LNG, and as well, as you said, as part of a holistic power energy solution. So who knows? The whole Kazakhstan thing, that's another very interesting thing, as we've seen with the increased tax rates. What news will we see out of Cameco and Kazatomprom, which is due to start in August? So will this increased tax for the Kazakhstan JVs take some pounds out of the market? Because they've essentially taken away the incentive to expand and hit the high end of subsoil use agreements to sort of play a bit of creative accounting with these tax brackets. So we're yet to see what the effect of that's going to be. Will Cameco, will Cigar Lake and MacArthur River actually bring in the chocolates? Will they be producing at these 18 million pound rates? Then the big WNA conference at the start of September, where all the bigwigs get together to talk uranium and contracting and everything else, because they've attributed that the uncertainty around these waivers is sort of one factor why everything's a bit quiet at the moment. There's not much going on in spot there. There's not much colour on what's going on about new contracts getting done at the moment. So
surely you'll be given the keynote, mate.
Oh, yeah, surprise. Where's me fucking plane ticket? Anyone that wants me over there. But if the likes of the great Mike Oehlman are correct in his, he's a uranium bull. He's bloody entrenched in it. So he's saying that real deficit will come around that 2030, and in, as he said, uranium contracting world, pounds contracted today could be 4, 5, 6 years down the road. So it's like the question is, will utilities start loading up on the pounds to secure supply for that 2030 period now? Or why haven't they already? And that's the thing. Like, everyone's like, there's all this big thesis developing for this to take off, but it hasn't. And you always think, is that for a reason? So they're the questions you need to ask. And it's one of those things, I end up in this spot where I have no answers, but there's a lot of questions. But there's obviously two sides. There's one side that doesn't see it as going any other way but up and ballistic. But it hasn't yet. And you always have to be cautious as an investor not to get bloody sucked into that.
Totally. Yeah, and in simple terms, I think the way you started out the segment, it's like spot on. It's like the most simplistic way to view commodity markets is at some price you have incentive for new supply to come online, and new supply is the cure for high prices. I think watching that supply dynamic is like, you know, the most meaningful thing you can do. Then you've got the whole contracting landscape, and yeah, maybe that's the bit that hasn't matched expectations at the moment. Yeah,
and I think, and as you got to, and you with all this bloody looking into it so much, you got to figure out is it going up, down, or staying the same. Who bloody knows? But I'd like to know an example of a commodity in terms of looking at the vertical integration of it that would be so complicated in the supply-demand dynamics. I would like to know if there's one more with as much moving parts as this and as much variation. Whereas when you talk about difference in the tail assay that they use through the centrifuges to then change how much uranium goes in and the enrichment supply. So like, as I said, the amount of reactor builds going around globally, plus and with such concentrated areas of enrichment and conversion, it just fascinates me, as you said, JD.
It's one of the reasons you get funds with a specific mandate just to study this part of the world. You know, there's not many other commodities where we see a fund. You know, you don't see pure copper funds.
Yeah.
That cover, and that is one of the reasons. Obviously, there's a couple other reasons as well. But yeah,
surely copper would have to be easier to model than this, I don't know.
I reckon.
I'll be interested to know.
Mate, I think the aluminium complex, which is one we're going to talk about next, is nowhere near as complex as uranium and the whole nuclear chain, but it has some complexities with the various stages of integration along the way.
In some ways, at least the demand for uranium, everyone knows what the only reason you use it for.
Yeah.
It's not like there's multiple use cases from that. So you can work backwards from energy modeling, which is in some ways simpler than other commodities, but it's the processing stages, which is a bit more complex, and figuring out what those bottlenecks are is like an interesting thing. And
with the contracting as well, knowing that, I suppose whether that takes some complexity out of it because everything's contracted so far down the line, it's not as, I don't know if it's as sensitive to fluctuations because it's all planned out 5-6 years ahead. I'm not sure. I'd love a bit of feedback from the gurus coming from a very simplistic base here. So it's bloody interesting stuff. I had a fucking migraine earlier, so I probably cocked up the whole thing. But I was going to do the Ray Charles with me sunnies on. I'm doing it for the team. Anyway, that's what's going bloody. See, I just turned in something very basic into a bloody uranium filibuster. So, but it's coming to an interesting time. The FAL. Once we go into the FAL.
The FAL. We'll see what comes out WNA, mate.
Yeah. What's right? Headed to the bloody South 32. Well, they're South 12 today. But it could be South 32 tomorrow. So
yeah, just about on the way. They're making good progress for the month to be S32, mate. So they had the quarterly come out as well as an update from Worsley Alumina. So let's get started with Worsley because I think that's the focus of the market. They're writing down Worsley by US $554 million. So that's naturally the headline that grabs people's attention. And I think we should just get everyone on the same page. To start with, Worsley Alumina accounts for the bauxite operations out near Boddington and then the alumina refinery near Collie. That is 86% owned by South 32 with a couple Japanese partners. So they started their environmental approvals process. This has obviously been in operation for many, many decades now, but environmental approvals processes to essentially start the next stage and continue what they're doing with their operations down there. But they've sort of felt that the approval that they got given by the WA government was so restrictive that it would challenge the long-term viability of the operations.
That was an approval, a conditional approval given to them on the 8th of July.
That's right.
Earlier this month, it was pretty onerous and they've come out with something today saying the long-term viability is challenged.
Yeah, and I think that particular wording is what the market's kind of grabbed onto. So the reason behind the write-down is essentially increased uncertainty, ultimately around the future cash flows of that part of the business and the sort of associated challenges in operating down there. So obviously an impairment's a non-cash expense. It'll show up in the full year results that we see in August, and you should see a tax benefit given the higher deductible expenses on the back of that.
But this operation is pretty crucial to a lot of different parts of the business, right? Like it's not like a standalone and doesn't feed everything else. There's layers to this operation.
Yeah, absolutely. So as a quick reminder, bauxite to alumina to aluminium, they mine the bauxite and in the southwest here, they turn it in a quite energy intensive process into alumina, which from that particular operation, they send part to the market and part to their smelters in southern Africa. So Hillside and Mozal in South Africa and Mozambique, one of them being 100% owned and the other 64% owned.
Yeah, right. You know why they build them over there, JD? Moselle and that?
Energy, mate. Power.
Cheap hydro power. So bloody, and well, you see more of them getting more stuff like this about to be built in Australia, and you know why that is, why things have changed.
I've got to guess. There's one company I think of with power, mate.
They way to offset hydro power costs is Silverstone installing it for you to give 110% long-term reliability.
I'm surprised
of that power that isn't hydro.
Surprised South 32 didn't mention that they're going to get in touch with Silverstone in the announcement
Jesus
today.
Christ, don't they? After dropping like that, they need some Silverstone in their life. So, mate, they could probably those South Africa, the ones there, they pretty much live on blackouts. So, God, they need some friggin' Silverstone in their life too.
They do.
Geez, they could go have a field day over there.
Get rid of Escom. Get
them in there.
Silverstone.
They'll even survey the ground where the power's going on to. They'll even sort the water out to feed the plant once the power's powering it. Like fucking, that is what a bloody turnkey of a mining mob. Go Silverstone. Thank you very much. Anyway, we digress. Back to why they need Silverstone. Continue.
Yeah, so just putting the importance of the aluminium complex for South 32 front and centre. This makes up, looking at a few broker reports, about 10 billion plus, 11 billion on some broker reports of the NAV of the whole business of a company that these guys put in the mid-20s. So about half the business, pretty substantial. Now, of course,
I would not have known that until you said that.
Now they've got an aluminium
huge
complex, like an integrated setup in Brazil as well. Mines, alumina, aluminium. So there's kind of two parts to it. But yeah, it makes up a very substantial amount of their business. And like we sort of said, that long-term viability, I think, is what's kind of spooked investors today. And hence, like you said at the top of the show, Matty, a 12 or 13% off is very substantial. But I think you got to take it with a bit of a pinch of salt, because there is the political aspect to this as well. They're a big employer. They want to, get off on the right foot with these negotiations, and this is kind of part and parcel of throwing their weight around and letting the state government know that, yes, they are a big employer. They want this operation to go ahead. They've been employing people and doing work in the state for decades, and they want to keep it going that way, and they don't want to be threatened, and they don't want to have the profitability of their operations put under too much pressure. So it's a bit of that going on at the moment, and this, like they said, it sort of started in 2019, this particular process. It takes a while to play out, and this is one step in that sort of journey.
Is the read-through that some of the conditions put on them in the conditional approval would mean, basically mining from lower grade areas and than their base case, and effectively that's kind of like,
Yeah, whether it's, at the end of the day, just higher cost. So whether that's mining from lower, it's pretty light on. It's a one sort of page announcement, whether that's mining from lower grade parts or, everything else that could make your sort of costs higher.
I've just read the commentary from JPM. They go, there is no detail yet, but we assume at this stage that these conditions impact the mine plan further, limiting access to high grade ore, which increases costs, lowers production, as experienced by AWAC. There may be CapEx involved to move to new areas. The impairment is large relative to the remaining carrying value of $2 billion, highlighting the impact. So, yeah, but like you say, and sometimes you put this kind of bearish outlook to the market as leverage in order to get the reduced conditionality from the regulator, and maybe that's the way to resolve things too.
Yeah, I think that's part and parcel of how bigger companies operate. They see what they can extract from state and federal governments.
Yeah, so right. So should we, is there any coincidence that it's been timed for this quarterly?
No way, mate.
This announcement.
Do you remember?
Don't believe in coincidence.
I don't know. Well, they didn't get the conditional approval until 8th of July. But I was always just thinking that there might be some negative surprises to come out this period of reporting for South 32, because you remember the measurement date for Graham Kerr's big payday was the 30th of June 2024. On this chart, I've marked the date clearly that South 32 they got there pretty easily in the end, outperforming both the MSCI World Index and the S&P Metals and Mining Index over the prior 4-year period, which would mean Kerr got the full LTI bonus, which at the time was nearly $10 million in South 32 shares. But since then, since 30 June, they've sold off nearly 20%, about 18%. in particular today, like you said, 12% alone. So things would be touch and go now if it was kind of measured over the next few days. But yeah,
I think it was my understanding that this then goes to this $10 million goes to the board in charge of REM, and they've still got a decision to make, and they might not give him every portion or every dollar of that.
Well, how about bloody go from, again, my low base? JD, why don't you educate me on the bauxite and alumina market broadly, mate, Mr. Money of Mine Macro?
It's getting pretty interesting, and we saw a couple little flyers in and around the ASX, Metro Mining and the bauxite end of things doing well. They're sort of coming back online, expanding, and they've got a tailwind of the bauxite price doing quite well. But long story short, you've got China having mined the best sources of bauxite for a long time. They're getting now to the lower quality sources, which are sort of higher silica, higher cost at the end of the day. And on the back of that, their imports are rising. You've also got Indonesia playing games. They're trying to do something similar to what they did with nickel, copper, and these sorts of things. So they banned from sort of mid to late 2023 the export of bauxite ores. That obviously has pressure on the price as well. And then you've got Guinea, a big exporter of bauxite as well. They were sort of plateauing a bit. They also had some strikes a few months back as well, which all, plays a role on the prices. Now, given the logistics involved, there are it's not just one price across the world. Obviously, you got prices depending on where all the ore is coming from and what the shipping rates are included in all of that. But ultimately, you've got the whole sort of complex bauxite, alumina and aluminium moving upward through the first half of the year. So aluminium hit roughly $2,700 a ton a couple months back. It's peeled right off. So it's sort of in and around $2,300 per ton these days. So that's since the end of May, it's peeled back. But this is all kind of reflective in South32's earnings. So if you look at the prices received comparing the first half of the financial year to the second half, Worsley and Brazil Alumina was up 9%, and Brazil Moselle and Hillside Aluminium was all up 6 to 10%. So the tailwinds in the space sort of served them quite well. And a couple of the commentators out there have kind of been saying maybe they see a bit more support around a price level where aluminium struggled to break through for a long time through 2023, and now that might be the sort of lower end of support. But again, like we kind of say with these macro outlooks and these commodity price assumptions, you can take them with a pinch of salt because they're quite hard to actually, see eventuate. But I mean, one of the big things you have to look for is Indonesia, whether they actually do, on reviewing that ban, decide that they're not going to put it in place or they are going to put it in place. That is going to have a big impact on price. And then, like we talk about with pretty much every metal out there, Chinese construction, what they end up doing will have a big sort of ramifications on aluminium pricing.
So is that spot price you quote there, JD, is that what they sell it at? Does it operate in similar to gold, or are they contracted, or how does aluminium sales work? Do you know?
That's a great question. I'd imagine they have offtakes with partners in China. Like I said, the guys will send some of their alumina to their smelters, in South32's case to Southern Africa, and some they'll sell straight up to smelters in China.
Okay, so there'd be a treatment charge on the stuff they send to China, but their stuff they'd be probably getting
close to
the buck for it.
Spot. Yeah.
Bloody interesting.
I really want to do a deep dive on this whole complex and the market dynamics, and I've kind of heard that sort of some inventories are really, really low. The whole kind of complex is pretty fragile to supply disruptions. Chinese production, which they brought on domestically kind of in the late 2000s, is depleting, and that's why they're kind of bringing on stuff from Guinea, and even that's kind of tapered off now. So,
and you can see that quarter on quarter the imports have been rising in recent times in China.
Yeah, so I think it's an area we should go deep on and seek some expertise for a future episode, I reckon.
Was there mania, was it around 2010 or something, the whole Rio Alcan thing? Like, was that when
2008.
there was a bit of an aluminium bull market?
There was in some ways, and like it depends who you talk to about that, because obviously the value of Alcan kind of all got written off in the end. But BHP had interest in Alcan, Rio ended up with it. And depending who you talk to, some people even reckon that Rio acquired Alcan as a bit of a poison pill to prevent, BHP from actually taking out Rio back then, because it, was filled with a bunch of liabilities, and it was a price tag BHP could never get comfortable with. But yeah, one day we'll go deep on that story, Matty and JD.
Yeah.
Hell of a poison pill to take.
Never thought I'd be all these commodities I would never have been interested in. But every commodity has an interesting place in the world.
They do, mate.
Even aluminium. God love it. Right, Regis, the McPhillamys DFS, the growth story.
That's it. Well,
the future growth.
The sort of, too long didn't read of this one is that nothing's really happening, but let's have a chat about it anyway. So
is that what TLDR is?
It
Didn't
is.
know that.
Yeah. So a couple of the details, 1.89 million ounces. They're going to mine at 1.1 grams per tonne, 7 million tonne per annum plant, 9.4 year operation, averaging 187,000 ounces, all-in sustaining cost a bit above 1,500 an ounce. NPV using a 5.5% discount rate of $850 million. And here's the big one, which was sort of seen in the past already, $1 billion CapEx. So guys, thoughts?
Yeah, just look at you just go straight to the 1.1 is, obviously low, but just looking at the met, like once they get into the fresh rock, like it's, average gold recovery of 85 to 89%. Looks bloody hard. You look at that Bomball work index of like 15 to 18. So Bomball 12 to 16. So that's like 16, that's like up at Bellevue levels. So I don't know if it's bloody hard, if there's like a semi-refractory nature. I couldn't really find anything. I did look back at the Newmont McPhillamys flotation test work back from like 2010, and it shows here like the presence of copper in. Couldn't find any mention of copper or anything in the Regis one today, but just looking at it, looks like there is copper there, and I don't know if there's a semi-refractory bit of copper, and I just think, why would you build a 7 million tonne plant and spend $1 billion? I know $1 billion isn't all the plant. Why would you build all that for a 10-year project when Katie is 40 k's away, which treats semi-refractory copper sort of mineralisation? Don't know. Can't say it getting over the line and happening when there'd be wouldn't you just truck at 40 k's? I don't know how amenable Newmont would be to that.
Does it even displace Cadia like there, or is it higher grade and better to
Cadia is
optimize like crazy already?
Yeah, I think Cadia is pretty it's a big fucking porphyry gold copper mine, so I'm not sure how it all blends in, but it's not Cadia is not a high grade bloody mine. It's just fucking huge. I think it's like 30 million tonne or something they pump through it. So I don't know.
I don't think the company in next steps have kind of said everything that needs to be said. The board will consider, FID in FY26.
Yeah.
It's an expensive option.
Oh, like you think of in these beautiful farm regions near Blaney, where it is, which is sort of, south of Orange, I've showed on the map there. You'd think the easiest way to get this mining would be processing it somewhere else and not putting a TSF in and not having to get permits to use bloody cyanide, just blow the thing up and truck it somewhere else. It'd be the lowest barrier to entry for something like this.
They ran a scenario with gold at spot sort of 3,500, and obviously the economics were like way better. So there's like talk there, great option value if gold really just like raws, but you don't see it kind of getting built unless you have just the whole kind of gold market sort of just sustainably stay super elevated and keep growing. I think. Not for a while. It'll get built one day. It's just like, is it meaningful today from an NPV perspective? Not really.
Probably not, no. But I think, and it looks like there's a lot of potential for it to go beyond that. That's the initial case, the initial pit and everything. I'm sure there's underground potential. Be great for great for the communities there. More mines, more money. But not sure. Can't. Don't know if it'll land somewhere else.
I'm sure they'll be exploring other options. I mean, they've got a growth issue now. because it's going to be hard to persuade shareholders to say that, yeah, we want to allocate $1 billion to this. And but yeah, I think that's why they're a prime candidate for a deal announcement in the not too distant future.
Yeah. I'm not sure if something like this, like you can't say like a Newmont are all about their tier 1 projects, what they class as tier 1 projects, and having just that in the portfolio. So you can't see them being interested in a project like this and trucking at 40Ks. Like, that's just not a Newmont thing to do. And God, I don't know if they do bloody toll treating arrangements or something on a big friggin' operation like that. I think maybe not. I'm not sure. So, yeah.
You'll be on hold for a while now.
Yeah, she's looking so. Oh God, especially considering how long it took for him to get through that native title part of the project. Imagine then going to full permit environmental approvals for like the whole thing.
Still waiting on some for the approval for the 90-kilometre pipeline, I think, at the moment. So, yeah.
Yeah. Well, God, if you were going to pick, here's a game. If you were going to pick one of our bloody great friends that needs to go out there, who would you pick? Question without notice. Who is most needed out there?
Big operation like that, you need a lot of water.
I'm thinking that 90-kilometre pipeline, why don't you negate that by finding some closer?
Very interesting, Matthew.
I reckon Jervois James will be Blaney James. He'll have enough work to go there, and it'll be WA and New South Wales water bores, because he could probably put 10% on that IRR. Jervois James with some water exploration out near McPhillamys.
Drop the WA, be Australia water bores.
Oh, Australian water bores. What a bloody put a trademark on that ASAP. JD.
Jervois James is going Australia-wide.
Mate, I think so, because like there is only so much work he can get in WA, and with us catapulting him to the top of water exploration in Australia, that's what's going to happen.
7 million tonnes per annum. That's a big operation.
Regis, get in touch ASAP before he starts. Obviously, the uranium paleo channels are going to take a bit of his time up. As I said, he's a man in demand. He's in more demand than a banner ad on the director's special. His schedule's filling up way longer, way more out than us.
You need water, get in touch.
Love your work, Jervois. Right, what's Trav? 3 companies under the microscope.
Sort of, yeah. One of them, it could be lights out.
In the pressure cooker.
For another one, it seems they avoided lights out earlier in the year and it's all systems go. And the last one, it was lights out a while ago, but they're stuck in purgatory. You ready?
I've just seen the first one. I'm trying to guess the other 2.
So the one that is it lights out is Jervois, the cobalt catastrophe. The company is in trading halt pending an announcement in relation to they got these ICO bonds for their ICO project. It was like a Nordic bonds to the tune of US $100 million in relation to the to their ICO asset, guaranteed by the head company Jervois. But there's a bit of a predicament for Jervois because they got a waiver on sort of some of the covenants in relation to this until the 20th of July. So that waiver, unless it's extended, is probably likely in breach as of 2 days ago. So unless they can extend this waiver, I don't know what happens there. The halt announcement specifically talks about extending the waiver and deferring an interest payment that is supposed to be made today on the 22nd of July to holders of that bond. It's like a semi-annual interest payment. So if they're trying to defer that, it probably means they can't stump up the money to pay it at this point in time, which isn't good news. So the question I have is, how supportive are the bondholders actually going to be here? It's been a challenging environment for cobalt, to say the least. Jervois bit off way more than they could chew, heaps of debt, assets in 3 continents. At some point they had like expansion or restart or development or construction plans across all 3 of them at the same freaking time, which mining companies don't do that. Sensible mining companies go one at a time.
I think in the future there will be a Control H, replace Jervois with Hastings. I think that is like the way you've explained that sounds like the predicament they might find themselves in with their Wailu convertible.
Maybe, yeah. I think Hastings have an issue, but it's a different issue in some respects, but it's not. Yeah, they could. I mean, it's Yeah.
They're in
Still
a
an
pickle.
issue. Still an issue.
I mean, having ICO being secured over the US 100 million is kind of interesting because that's not worth 100 million.
No, but there was a guarantee from the head company, so
which is not a good sign for the head company.
Exactly. And they've got one of the ugliest balance sheets you'll ever see for a mining company. Drawn debt of US 169 million at 31st of March when their cash was a mere 26 million. Operations lost $18 million in that quarter, by the way. So they'd need to clean up the balance sheet massively. When I looked, I think their market cap on ASX was like $50 million. So not very attractive from a gearing perspective, to say the least. And I think that the trouble is they need to clean up the balance sheet, but I can't think of a sensible I can't imagine how a sensible investor could, reasonably put equity into that. That's just such a, it's so hard to clean that balance sheet up. It just looks really ugly.
Can you get a negative market cap? Considering the debt, you'd still have a positive EV.
You just go into suspension and you never come out, and then equity gets zero, and
that'd be the go. People pay you to take the shares.
Surely every investor that had any interest would have been touched up in the last 15 capital raisings that they've done.
98% down since I think mid 2022. So in like 2 years' time, that's a lot of value destruction in my opinion. But hey, maybe they can buy more time and pull a rabbit out of the hat. Aussie Super to the rescue. Who knows, mate? But it doesn't look like it's going to end pretty for the current shareholders. I'll put it that way.
Yeah.
Right. Number 2,
mate. Sierra Rutile. So they were actually in a bit of trouble earlier in the year when the government sort of looked like the government were bloody rug pulling them. And anyway, it's apparently not in trouble anymore because the bid from Leon Oil has translated into an agreed cash offer recommended by the board at 18 cents per share. Remember, GemCorp had agreed a bid with the board just a couple of weeks ago at 16 cents per share, and now this. So the stock it's kind of trading at exactly 18 cents today. So despite the many parties with kind of a hefty shareholding, you've got GemCorp, PRM, Mano, Leon Oil, all on the register. All have come on recently and all have a chunky size. The market isn't really pricing in too much of a probability of a higher bid from here. And I think that's probably fair. Remember Jan Joubert, who's...
I was about to say, what's he up to at the moment, the big fella?
He's he like Mano were the ones that wanted him on the board, so like he's just, I don't know if Mano are going to put a bid in or not. I wouldn't be betting on it. Mining at Area 1 has recommenced. The project looks like it's going to make its way into the hands of a Leonian kind of company, being Leon Oil. So like imagine the tax regime kind of issue they'll have with the government. There'll be a resolution there because it's the government basically, like by all accounts, did not get along very well with Sierra Rutile, the management there, but they might get along with Leonian company better. And GemCorp, who had that agreed bid a couple of weeks ago, so they're special sits guys, right? And they'll be happy to bank the return they made buying stock from Stam at 15 cents and 3 months ago now getting 18 cents a share. That's like a 20% return in 3 months. Maybe they've got to wait a bit longer for it to complete or whatever, but it's a pretty tidy return. And Mano, like I said, don't know what they'll do. PRM, they were the entity related to Craig Dean, the commodity trader. They had a bid at 9.5 cents on market, but haven't seen or heard much of them later other than just asking a few questions at the AGM. So don't know what happens to them or where they go either. But it could also be one where you have some minority shareholders band together and hold out and get a little bit of an uplift collectively. But I don't know. It's just so hard to have insight into how many behind-the-scenes conversations have been had between these parties that no one really fucking knows much about.
Oh, mate, I'd love to bloody... You don't want old Jan Joubert dropping the hammer on you. God, yeah. Bloody, how good's that? It's like I know him.
Yeah. Company number 3.
The third one, mate, the one stuck in purgatory is Galena. So, I mean, they're still in suspension, and their concentrate production was 54% higher quarter on quarter, which is really good news for them. But they're still in suspension. They've still got the voluntary administrators appointed there. There's no indication if they're making cash yet. CFO's departed recently. They said they're reviewing recap options at the moment still. So let's hope the operational kind of cash flow trends the right way to enable them to actually kind of recap in a way that's sustainable for the company as well. But yeah, TBA, just keep watching still in purgatory.
Yeah, right. So no. So do they? Because they don't have to give a.
It was just an operational
They
update.
don't have to give a financial statement now while they're in.
I don't think they do.
Suspension.
There'll be a recompliance thing when they relist, and if they relist. But yeah, at the moment, I don't think they're obliged to do anything like that. Yeah.
Yeah. Yeah, that'd be interesting to know.
Yeah.
It's weird when you have something in admin that might be making money.
Yeah.
Don't know.
Yeah. Yeah. TBA.
You reckon they are, JD? You're a man in the know.
I mean, are you talking about after debt repayments? After debt repayments, I don't think there will be. No.
Yeah, operationally.
Well, not enough to service the debt. I don't think they're getting close to
What
that.
have they got? 200 odd?
About that ballpark.
Yeah, it'll be. That's pretty onerous.
Don't build a mine, they reckon. Especially with debt.
Well, one company operations run the risk.
Yes, righto. Bloody, who's not running the risk?
Anyone using Axis.
Anyone using Axis and Axis themselves. Pretty much a bloody sure bet.
Also, if you're using Mineral Mining Services, MMS, VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, WA Water Bores, soon to be renamed Australia Water Bores, K-Drill, and use Spark while you're at it.
Use Spark. GC at Money of Mine for a director's special ad. That's all you need to know.
That's it.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.